Mortgage rates just hit their highest points in months. And that's not even the craziest thing that happened this week. Tariffs, Fed shakeups, and a possible recession. If you're buying, selling, or sitting on the fence, you need to hear this. Oh, I'll break it down fast, keep it real, and help you stay two steps ahead in this wild market. Let's go. Hey everyone, Lori here, your local go-to realtor in Placer County. It's Thursday, April 10th, and wow, what a week it's been in the world of real estate and finance. Let's dive into the latest updates that matter to you as buyers and sellers here in Placer County, Nevada County, Sacramento County, and El Dorado County. I cover all those areas, preferably Placer County, but I'll go where I need to go. So mortgage rates are on the move. As of today, the average 30-year fixed mortgage rate has climbed up to, oh God, I can't say it, no, 7.06%, marking its highest point since mid-January. On Monday, it was 6.3. I got a text from a mortgage lender, and I shared that with a bunch of my buyers. I'm like, what happened? So, anyway, back to you. The 15-year fixed rate isn't far behind, averaging 6.22%. This uptick is closely tied to recent movements in the bond market, especially the 10-year Treasury yields. When these yields rise, mortgage rates often follow suit. By the way, I will post where I get this information afterwards. Tariff tensions, double T, and market reactions. So, in a surprising turn, what? President Trump announced a 90-day suspension on most planned tariffs, maintaining a baseline of 10% rate, but escalating tariffs on Chinese goods to 125%. This decision led to a brief rally in global stock markets. Rally, including gains in Asian and European indices. Did I say that right? Indices. I should learn that. I will. However, the US markets responded with vitality. Did I say that right? Yeah, I think so. Oh my God. With the Dow plunging over 1,000 points after the initial surge. And here's the Federal Reserve's stance. Their recent meeting minutes indicate a cautious approach. While some officials support a steady balance sheet runoff, there's an overarching concern about persistent inflation. Oh, balance sheets. I majored in accounting in college at the University of Texas at Austin, and I lasted a month. I dropped out of that class fast. I could not stay awake. It was just too exciting for me. So the Fed aims to withdraw enough liquidity to allow for normal short-term interest rate volatility. Oh my God, can't do it. Keeping a close eye, I do not say that word very often. Volatility. Okay, so keeping a close eye on economic indicators to guide future decisions. Inflation insights. Yes, here's exciting news. The Consumer Price Index is CPI for March showed a slight decrease of 0.1%, bringing the annual inflation rate to 2.4%. Notably, the energy index fell by 2.4%, with gasoline prices dropping by 6.3%. On the other hand, the food index rose by 0.4%. So if you go to a charcuterie party, eat it up because they want that food too. That's big bucks right there making a charcuterie platter. So anyway, this is highlighting the mixed nature of price changes across different sectors. So here's some news about recession risk. Goldman Sachs has raised the probability of a U.S. recession to 45%, up from 35% earlier. I don't know how early that was, but it was earlier. This adjustment reflects concerns over escalating trade tensions and their potential impact on economic growth. The firm also cut its GDP growth forecast for 2025 to 0.5%, citing factors like tightened financial conditions and increased policy uncertainty. Do you have any idea what I just said? I don't think I do either. What this means for you, for buyers, now this is where I can come in, okay? The rising mortgage rates emphasize the importance of locking in rates sooner rather than later. All you people keep waiting and waiting and waiting. When's the best time to do it? When you plant the tree 20 years ago. It's crucial to assess your financial situation and consult with a trusted lender to navigate these changes effectively. And I have some very trustworthy lenders I can help you out with. We don't get paid until escrow closes. So use us, call us, talk to us, get advice, say thank you very much, hang up if you can't deal with us, but we're here to help. Our job is to serve. I'm ready to do that. And so are my lenders. Sorry, I went off on a tangent. For sellers, understanding the current market dynamics can help in pricing your property competitively. While the market remains active, being aware of economic indicators and buyer sentiment can position your property favorably. What I'm noticing houses that are sitting, you're priced too high. That's it, you're priced too high. I know some of them are very unique. Like I just saw a castle today. It's going to take a little while. Understandable. And it's 20 acres. So there you go. But some of them overpriced. So here's the final thoughts. I can't say my final thoughts because I grabbed all this information from various sources, but the real estate landscape is continually evolving every day. It's influenced by a myriad of economic factors. Staying informed is key. You can just watch my videos and I'll help you out. I will be consistent. I promise. I promise. I promise. I got to lock down a time. And you know what? If you have any questions, like I said, or you need personalized advice, feel free to reach out, me or ask for a lender, and I'll send them over. I'm here to help you navigate these changes and make informed decisions, not just one. So just stay tuned for more updates. And as always, let's make your real estate journey a successful one. And if you're on my YouTube channel, there's more videos to watch that are very exciting. You should check them out. Have a fabulous weekend and enjoy the spring weather. And hurry up before the flies come out bothering your horses. That's what I got to deal with.